Run us through where things stand.
Yeah, exactly. I mean, we are seeing increasing scrutiny over Chinese companies in the U.S. We've seen a number of companies listing in New York over the past few years, and now we're seeing how some of them are retrenching with help from private equity firms deploying billions of dollars of capital, along with some of the big companies, for instance, Tencent. We've seen just in the last week or so at least two big deals. One was the acquisition of Tencent along with a private equity of Bitauto, and then the one on Monday, almost $9 billion take private of 58.com, the China's answer to Craigslist. So we are seeing, I mean, this further scrutiny and tensions between Beijing and Washington. Some of these companies are coming back home, and we're talking about very good quality companies that are doing really well. So the exit strategy down the line for some of these investors will be clear closer to home as well.
Yeah, Manuel, David here. I mean, we got the final details of the JD.com listing, which, if according to schedule, should be trading this time tomorrow. Private equity firms taking a lot of these companies private, that's just the first step, right? Eventually, some of these names will eventually relist in Hong Kong. Is that the sort of path forward?
Yes, David, very much so. I think that's one of the options. It's not the only one. They can also do a trade in the private markets, but I think it makes a lot of sense for especially the good quality companies. We've seen a number of them in the past, still ongoing, some of them, by the way, like we mentioned in our story with China Biologic Products, for instance. I think it's an interesting one in the plasma space. But definitely, yes, an IPO closer to home, say Hong Kong, Shanghai, Shenzhen, could be a good option. Some M&A could potentially be an interesting exit strategy for some of them, but definitely an interesting space to watch over the coming months, definitely.